A margin call from trading support and resistance. What happened? Hi and welcome back to Trading Strategy Testing channel where we learn and test your trading strategies. After publishing the first 2 episodes of the new Forex Live Trading Strategies series where we traded MACD and Bollinger Band, we received a lot of great and supporting comments from you guys which we really appreciate. We have also received a request from Manohar Shetty asking us to make a video trading support and resistance. As usual, feel free to suggest your strategies in the comment section. Well, thanks Manohar for your request. To fulfill your wish, we will trade today the support and resistance. All the steps from choosing the pair, doing the technical analysis and placing the trade will be done live, so you could enjoy the experience and learn as much possible from the opportunity. At the end of the video we will see whether the trade would end up with a profit or loss. We have a little surprise and an important life lesson at the end of the video. It will be a great way to test strategies and share with you all the aspects of trading from a full-time trader perspective. I personally wish I had such content when I started trading a few years back. If this is your first time here, consider subscribing to the channel and give us a thumbs up to help the channel grow and encourage us to make more content in future. Let's get started.
Looks like we are having a stable day, and there are low chances for instant volatility in the market. In these conditions you can assume that the tendency to respect the technical analysis will be higher across the different Forex pairs. Regarding the Reserve Bank of Australia monetary statement release, I would not give it much importance as it was released in the early morning, and it would probably cause an upward spike to the Aussie pairs, as the analysis became hawkish similarly to the same announcement that the RBA has made last Friday. To be safe, I tend to advise my students to check out yesterday's news, as some fundamentals tend to have an extended impact on the market. So to sum up, based on this analysis, the market will tend to be stable today. But if you are entering the market during the Asian session, you might need to be careful as the Australian and New Zealand dollar might experience some high volatility, and the same thing would apply to the pound, as the 3 currencies seem to have a strong correlation. But which Forex pair should we trade today? Let's continue watching to learn one of the strategies I use to select the right pair from more than 60 pairs that my broker is offering. One of the ways to choose the best pair to trade is by looking at the currency strength index. It gives you a quick visual interpretation of the currency pairs that are currently strong and the ones which are weak. You can see that the pound is experiencing a high performance against all the other main currencies in the Forex market, whereas the USD seems to be weak. The best pairs to trade are usually made of a strong currency traded against a weak one. Based on the fundamental analysis, we have noticed that the Australian dollar is hawkish, which means that the Australian regulator is positive about the economic growth outlook and expects inflation to increase. Since the British pound's USD and the Australian dollar's USD are highly correlated pairs, we can conclude that the pound USD will continue its uptrend. Great, we are done with our fundamental analysis. Before we move on to the technical analysis and placing the trade, kindly give the video a thumbs up and subscribe to the channel to get a notification as soon as we release a new video, and don't forget to hit on that bell icon. It takes just a second to do it, but it could contribute a lot to the growth of this channel. We will start by drawing the major support and resistance levels. Make sure to highlight the most obvious and easily spotted areas. You don't have to spend too much time looking for the significant resistance and support levels. If the level is not easily seen, it's probably not that strong. The best way to do it is to start from the high time frames. I usually start from the daily and come down to the 15 minutes time frame. Technically speaking, support and resistance areas are confluence zones, which could act as major swing points, where the price has a tendency to turn away from and begin a completely new trend. The lines are just there to help us visualize the zones. So avoid treating them as line but zones instead. Feel free to follow the way we draw the lines. Keep in mind that your goal is to spot significant levels, which can cause the price to bounce from them and create the potential for buying or selling. There is a common mistake in technical analysis. It consists of scrolling back through the time scale of the chart too far. I have noticed many traders who like to plot all possible levels on the chart. Honestly and based on my experience, this is not the best approach, and it could prevent you from spotting some great opportunities. We can notice the presence of a highly significant daily resistance zone. The highest is the time frame, the strongest will be the support or resistance area. We can assume that the price might reverse or continue upwards as the price is approaching the zone. So to be safe, we will place a buy stop order which will be triggered only if the price continues up. If it is not triggered, our capital will remain safe. Regarding the stop loss level, just place it a few pips below the end of the uptrend spike. We will opt for a 1 to 1.3 risk to reward ratio. The most important thing is to have your take profit below the resistance level. The basic trading method for using support and resistance is to go long near support and uptrends and to go short near resistance and downtrends. When the price breaks through a resistance zone, it directly becomes a support level, and once broken, the support area becomes a resistance level. Perfect, let's choose the volume size that we will be trading. Always remember to never risk more than 3% of your account in one trade. We will be using the position size calculator which is available on earnforex.com. All you need is to select the pair, the risk level, and the number of pips that your stop loss is away from the entry. In some cases the calculator will ask you to add in the entry price manually. Once done, the calculator will show you the right volume size and the amount of money you are risking in this trade. You can see that we are risking $20 on this trade, and the right volume is 0.227 lot size. Let's place our trade on MetaTrader. You can see that we are running a $1,000 demo account. I won't place this trade on my personal account as I have already achieved my objective for today. While your strategy determines how often you day trade, overtrading can occur when you take more trades than your strategy dictates. This is often a result of boredom or lack of discipline. I always advise beginners to avoid trading on Monday and Friday unless you are trading major news like we did in the last video. As the market tends to be unstable and with the lack of well-developed and reliable structures, trends might not be formed easily. Let me know in the comments section if you want me to test a trading strategy on a daily basis to see which days are more profitable. We received a question recently from Ed Laptop Seeger in the comments section about the best strategy to monitor your trades. Well, one of the coolest features of MetaTrader is the alert option. Once you set the alert, the software will notify you as soon as the price gets to a certain level. With the technology we have in hand, we don't need to monitor the screen the whole time. You can see now how I do it, so the software will notify me when the price is getting closer to my take profit area. This is extremely useful if you are one of those traders who like to partially close the position and let it run while securing the profit by adjusting the stop loss level. I have made a live demonstration of this strategy in the video where I tested the so-called 100% win trading strategy. Thanks again for your question. I have answered the remaining questions in the comments section. So guys, feel free to ask me any question you might have about the topics we cover on this channel or about trading in general. I will do my best to answer in the comments section or probably answer it in my future videos. The order has just been triggered, so would it end up hitting the take profit or the stop loss? Let's wait and see. We have received a question from Terrell Donald about a certain broker. I masked the name of the broker to avoid any unnecessary issues. But in general, I advise all of my students to solely rely on brokers which are regulated in a Tier 1 legislation. But be careful as some brokers are regulated in different legislations and they tend to differentiate their clients based on their country of origin. So make sure to ask your broker where your account is regulated and try to avoid opening an account under a Tier 2 or 3 legislation. The regulator will protect your funds if your brokerage goes out of business. Let me know if you want me to make a special video about this topic, and again thanks Terrell for bringing this up. Let's take another question before checking the final results. Edwilson reacted to the video where I shared my personal story in Forex from my startings few years back. The question is about my personal trading strategy. Well, I personally use different swing and scalping strategies depending on the market conditions. To sum up, Most of my strategies are initiated by important news, supported by the technical analysis, and boosted up by the risk-to-reward ratio I am using. I will be sharing the strategies step by step as the channel grows, so kindly give this video a thumbs up, subscribe if it is your first time here, and hit the bell to be notified as soon as I publish a new video. Thanks Edwilson for your question, and the comment section is all yours if you have any question you wish to ask. Let's see the results now and how the take profit and stop loss play an important role in our trading performance. You can see that we have hit the take profit level and made $26.45, which is around 2.6% our capital from one trade, which is amazing. You can also notice that the price has continued its upward momentum and crossed the upper resistance we had drawn earlier. But let's say if we didn't have a take profit, how much money we could have made? The best way to answer this question is by using our Trading Journal Excel template, which you can download for free from the link in the description. Let's see first how many pips we missed by exiting the trade early. Wow, that's 70 pips upward trend. We need to fill up the Trading Journal form to get the answer. The volume size of the trade was 0.23. If we didn't close the trade, we could have made a total profit of $161.46, which is around 16% of the account from one single trade. So do I regret exiting early? Probably not. Just imagine if we went short on this one and we didn't have a stop loss. We will be lucky if we wake up in the morning with just 16% of the account gone. Plus, if we risked more than 2% of the account, we might have received a margin call a few hours back. So make sure you always use a stop loss, and feel free to check out the video where we tested trading the same orders with and without a stop loss. Thank you for watching and happy trading.